Yo man, join our new Telegram channel below. The link is down below for exclusives. Join our new Telegram channel right now. Don't miss out. It's fire there. We're winning, man. And remember that we're posting videos each and every Tuesday, Thursday, and Saturday. Posting videos Tuesday, Thursday, and Saturday. Keep your alarms on. Yeah. Sir, yo, you too. Welcome to the Great FX TV, man. If you're new to the channel, hit that subscribe button. If you're still with the force, just hit that like button, man, and share the video so that you can reach as many people as possible, man. You know, with the double P, the productivity and the positivity, man. So right here, guys, I know there are people, right? Like, I'm trying to accommodate each and everyone right here. You know, I'm trying to accommodate each and everyone right here. So there are people who like to use indicators. There are people who like to use pure price action. There are people who like to use smart money concepts, which is S.M.C. So in this video, I'm going to accommodate the ones of smart money concept. All right, so let's get it, man. So one thing you have to do, guys, remember, you should not complicate things. And remember that you should not think about what the market might do. React to what the market is doing in that particular moment. So right here, we have boom, right? So on boom, remember that we buy only. We buy. And then on crash, we sell. So what are we going to do? We're just going to look for buy opportunities, meaning we're just going to look for buy order blocks only. Okay, fine. So, okay, let's look at the market. This is the market, you see? This is the market. You can see that it has been playing around like we have been in an uptrend, right? We went up. You see that we created, you know, higher lows and higher highs, higher lows and higher highs, higher lows and higher highs. And then eventually, for people who trade pure price action, I know they're going to say we broke a trend right here. We broke a trend line right here. And then after breaking a trend line, we retested, and then this is when we changed a trend. But then now this is smart money concept. We're not going to do it like that. It is almost similar, but then not the same thing. Okay, you can see that the market, you know, kept on going up, down, up, down, up, down, up, down, up, and then let's say the market was here. Let's say the market was here for that particular moment. You can see, okay, the market has been going up, down, up, down. So meaning this is what? Impulsive movement, correction, impulse, correction, impulse, correction. So what is this market doing? You can see that, okay, the market, guys, each and every time, let's say, okay, the market has been coming, you know, from the top to the downside. The market has been in a downtrend, and then now we are changing. You can see that the market is about to change, correct, or the market is about to change the trend. Okay, so what you're going to do is that you can see right here. You can see right here the market went up, came down, and then meaning we had a higher high right here, and then this is our higher low. So the market went to the upside and then broke this level. So if the market breaks this level, we call that a break of structure to the upside, you know. So and that is what we actually want. Okay, after the market breaks, let me remove this. Let me remove this though. As you can see, right, that's perfect. The market, actually, let me start it from, you know, the bottom. Guys, you can see that the market has been, you know, coming to the downside, right? So what do we get if the market comes to the downside? We're getting a series of lower highs and lower lows, right? So that is a downtrend. Okay, cool. After we got our downtrend, you can see that this is H4. You have to start analyzing on a higher time frame. You can start on a daily time frame, but then I prefer starting on H4. So cool. You can see that the market has been coming down, right? And then right here it decided to range a little bit, and then it went up to, to get out of this little range. After it got out, you can see that it came back to the downside. Okay, fine, we got some sort of, a little peak right there, a little high, but then what the market did, it decided to push back to the upside. So look at what I marked. You can see that, okay, we had this high, right? The market came to the downside, and then after it came to the downside, it decided to push to the upside. So as it pushed to the upside, it decided to what? To break this high. So what do we call this? If this was trading view, I was going to mark it for you guys. So this is MetaTrader. I don't, I won't be able to mark it. So okay, you can see that the market has been, having series of lower highs and lower lows. So this is some sort of what? A change of character, guys. So do you know what is a character, right? A character, it is just, a certain act. So okay, we have been getting an act of lower highs and lower lows. So this one is a different story. The market decided to go up, come down, and then went up again and broke this high. So this is where we call the market has changed a character. The market has been giving us, meaning the market has been breaking lower lows. So now the market is breaking a lower high. So what is that? It is a change of character, which is what the market did right there. You can see it went up. You can see, right? So, okay, cool. Guys, as the market gave us this, what are we going to do? We're going to mark the last bearish candle before this move to the upside. You can see that we had a bullish, and then where is our last bearish candle before the break to the upside or before the move? This was our last bearish candle. Okay, cool. So let's say let me remove this. The market just broke this high, right? Let's say the market is around here. So now what we're going to do, we mark, if the market just broke this, we're going to mark our last bearish candle before this up move. Okay, cool, we marked it. So what are we going to do? It is that we're going to wait for the market to retrace to this bearish candle. So we're going to wait for the market to retrace to this zone. Okay, fine. After the market retraces here, we're not just going to buy. What we're going to do is that, okay, we're going to wait for some reactions. You can see that when the market got here, you got some sort of wicks, so which is some sort of rejections. Okay, after you're getting your rejections, you just not buy yet. You're going to go to your M15 time frame. I hope that we're going to get it on M15 because it is too far for M15. Lower time frames only shows the current. Oh my goodness, I knew it. We're not going to see it. I know it. Let me see with M30. I know we're not going to see it. Lower time frames only shows. Okay, fine. So you can see that the market broke this high, right? It went up and then it came down. This whole box, it is a box from H4. Okay, you're going to wait. You're going to wait. You're going to wait. What are you going to wait for? Them guys, we're not going to get a clear thing, but then if this was, and 15, we were going to get it. Okay, it's fine. Then you're going to go to your lower time frame. As you get to your lower time frame, you can see that we got a lot of rejections right here. So meaning that we have a lot of reactions that was showing us, oh, this level might be having a strong momentum to push the market to the upside. Okay, as we get these, what we're going to do, we're going to mark the previous high again. Now on on a lower time frame, right? We just marked it. Let me make it straight. Cool. Oh, excuse me. I just want to make it straight, guys. Yeah, that's it. So what you're going to do, you're not going to buy yet. All right. You can see the market reacted and then it decided to go to the upside, right? And then you're going to mark the previous high. Here's the previous high. Okay, here you see the market didn't break it, right? It decided to respect it. It came to the upside, to the downside, and then right here it decided to go up again. So what we're going to do now, we did that on a higher time frame, right? So we're now doing it on a lower time frame. We're going to mark the last bearish candle. Here is the last bearish candle. The last bearish candle before this break. You can see right here we didn't break, right? The market decided to come to the downside again just to retrace, and then after right here the market decided to push to the upside. As you can see, the market decided to push to the upside. From here the market decided to shoot, and then as it shot, it broke this level. So this is the last bearish candle before this. So an order block, guys, we just explained what is a change of character, right? A change of character, I said it is when, okay, the market was on a series of lower highs and lower lows. Now, so as the market is on a series of lower lows and lower highs, so meaning that the market keeps on breaking lower lows, right? So what is a change of character? A change of character, it is when now the market is about to change a character. It is no longer breaking the lower lows. It is now breaking a lower high, and then that's kind of, a little bit of a sign that the market might shoot to the upside. Okay, cool. So we just marked this big one from a high time frame, right? So you're not going to buy yet. You will wait for the market to push to the upside. Okay, as it shot to the upside, you're going to wait for the market to break this previous high. So as it broke that previous high, you're going to mark the last bearish candle before the break. Okay, this is the bearish. So what now, you're going to be really sure. What you're going to do is that when after the market just breaks it, the market will retrace, right? So after it retraces, now you're going to wait for the market to get to this last bearish candle of yours, and then right here you're going to click right here. Let me show you. When the market gets to the middle of this bearish candlestick, you're going to buy. And then you can see that you just bought on this last candle, and then the market decided to short up. And then on 1 minute, that would be your spikes. You can see you would have bought right here, and then those are your spikes. Beautiful long spikes, guys. Beautiful long spikes. Beautiful long spikes, guys. So yes. Let's try to look at another example. That's the first thing you do. Okay. All right. Let's see. Okay, you can see that the market have been going up, down. So this is what we want, whereby the market is breaking, the higher highs. But then I want where the market retraced to our order block. Okay, here it is. You can see, let me see, 14 minutes. Oh my goodness. Okay, you can see that the market, the market has been coming down, right? The market has been coming down. Actually, let me make it as if I am analyzing it. Okay, this is your market. You're going to do what? You're going to mark the market structure first. So you take your horizontal lines, you mark the primary structures. You mark your highest highs and your lowest lows. So this is my highest high. Let's say, the market was maybe, here. Let's say it was there. So that is my highest high. What is that? It is the move. It is the point that started this whole movement to the downside. Cool. After I mark it, I'm going to mark this one. Okay, I can see. All right. I'm in type of inside this range. So I'm going now. What am I going to do? I'm going to check the trend. Okay, I can see that right here the market was pushing to the upside. Okay, fine. And then right here the market was deciding to push to the downside. Okay, meaning that we are now in a downtrend. Okay, it's cool. So as we are in a downtrend, remember, you have to check market structure. We are in a downtrend. The market decided to push strongly to the upside, and then the market decided to come to the downside. So what you're going to check, guys, you have to check a downtrend. It is something like this, lower low, lower high, lower low, lower high, lower low. So meaning that you're going to, in a downtrend, the market has to break these levels. It has to break the lower lows. So as you can see right here, the market didn't break. So guys, if the market doesn't break this level, you see this one, if the market doesn't break this level, this is supposed to show you that we might be having the momentum to the upside. Okay, you can see that, okay, the market has been coming down, went up, came down again, and then we got rejections, and then the market decided to go to the upside, and then that should catch your attention. And then as you can see, the market failed to break right here, right? Okay, it's fine. You don't react yet. What you're going to do is that you're going to keep up with the market. You can see that after here, the market decided to push to the upside. After the market pushed to the upside, the market broke this. The market broke this high, guys. You can see that. Let me remove this one. You can see that, okay, after the market respected this previous sub demand, the market decided to push to the upside, and then it broke this structure. So that's what we call a change of character. Okay, cool. I hope I explained the change of character at the beginning of the video, and I hope you understood it. So okay, fine. We went to the upside, right? We went to the upside, and then we broke this structure. So that showed what? A change of character, and then that shows we might be having a momentum to the upside. Okay, that's cool. So remember, what did I say? I said you have to mark the last bearish candle before the break of structure. But then let me give you a little secret. You can see that here's the last one, right? You are still going to catch your spikes right here, but then let me give you a little secret. Okay, fine. You can see, right? But then I wouldn't prefer to take this one. You have to be asking yourself, why are you not taking this one? Okay, guys, in this type of thing, we have what we call a premium area and a discount area. So each and every time you trade, make sure that you trade at a discount area if you buy. Okay, let me show you what is a discount area. You can see, okay, the market decided to push to the upside. It broke this high, right? So what did I say? I said you have to mark the last bearish candle before the breakout. Okay, cool. You marked that one, but then it didn't work. Why? Because that's a premium area. So what do? Let me give you all guys a secret. What you're going to do is that you're going to take your Fibonacci. After taking your Fibonacci, you're going to take it from here, from that high Let me show you. From that high to this low. Yes, that's it, guys. So let me remove these OTE things just so that you guys can be able. Let me remove them. Let me remove them. Yes. Let me remove even these levels. Let me remove even these levels. Yeah. So what you're going to do, all right, you can see that the market broke this high, right? The market decides to come to the downside. So guys, what is a premium area? A premium area is an area about 50%. So 50% of your leg, this is the leg to the upside, right? You took the Fibonacci from here to here. Okay, cool. So you have to, if you buy, you have to buy at a discount area. So a discount area, it is an area like this whole area below 50, and then this area above 50, it is a premium area. So the premium, it is used when you sell. The discount, it is used when you buy. So which one it is mostly in the discount? Which last bearish candle it is mostly in the discount? This one? No. This one? Yes. So this is the candle. You were going to mark this one. Why? Because we can see, okay, we broke this, but then you have to mark. I know you have, a lot of last bearish candlesticks, but then you have to mark the bearish candlestick that is, the one that is the last one before the whole movement, and the one that is mostly in the discount area. And then I said the discount area, it is the area below 50. Okay, cool. I hope you caught that. After that, you're going to wait for the market to retrace. Okay, you can see we broke this, so you're expecting, to get another series of higher highs and higher lows. So the market retraced, and then when the market got here, you can see that we got some rejections. Okay, you did not buy yet. You're going to go to your M15. After getting to your M15, where's the thing? Yes, I love M15. It is so perfect, guys. It is so perfect. You can see, okay, we got rejections right here, right? And then the market decided to go to the upside. After it went to the upside, it created some sort of, a retracement. It went to the upside. So, okay, when the market got here, it broke this level. You're going to mark it. After the market breaks that level, you're going to mark the last bearish candlestick before the movement that broke the level. You can see, all right, the market decided to retrace, and then it went up. It broke this level. Okay, we marked the last bearish candle. Which one is it? This one. So right now we are on M15. We are now operating with M15. You're going to wait for the market to retrace to this bearish candle. As you can see that after it retraced, guys, with a little wick, you would have bought, and then you see that you went all in profit. You see, guys, all in profit. You can see that. How awesome is that? So you can see if you bought right here, just look at the money you would have made. Remember, these are the spikes. So yeah, guys, that's it, man. That's it. If you want me to do more videos of S.M.C, you can just comment below under this video, man. And remember that, guys, join my Telegram. There's a Telegram link below. Join my Telegram, man. If you wanted exclusives, we're going to operate right there. So yeah, guys, That's it. Thank you. If you stayed up to this far, man, I appreciate you. Let's keep on pushing, guys. I'm just trying to accommodate each and everybody who's who has a different trading style. Remember that we have people who trade with indicators, we have people who trade with price action, we have people who trade with S.M.C, we have people who trade with Elliott waves, we have people who trade with strictly Fibonacci. We have people who trade with only supply and demand. We have people who trade with only resistance and support. So yeah, man. So I'm trying to accommodate each and everybody. So yeah, man. Thank you if you stayed up to this far, man. If you're new to the channel, just hit the subscribe button, man. If you're still with the force, just hit that like button and share the video so you can reach as many people as possible, man. I appreciate you. Thank you, guys, and I'm out, man.